in the House. It's the Speaker of the House, Philip Gunn. All right, let's switch to the personal income tax.
Yes, sir.
Anything's happened since the last time we talked to you as far as bringing the Senate together, or have you heard anything about the status of their meetings that they are having?
Yes, I've been in great, extensive conversations with the Lieutenant Governor's office and the Lieutenant Governor and the chairman of the committee over there, and we are continuing to have discussions, trying to walk through the plan that we propose to address whatever concerns that have been raised. Tomorrow, what's the day? Tuesday? Yeah, tomorrow. Wednesday, Thursday, we're having hearings, House and Senate together. 2 days of hearings where we plan to show the details of our proposal and hopefully get everybody on board to either pass that or something like that, or something that will help get rid of the income tax. We believe our goal ought to be to get rid of the income tax as quickly as possible. Get there as quickly as possible. The proposals or the suggestion that's been made that we just do this through growth is just not a plan. That's not a proposal or a plan. The math that we've calculated shows that if we just do it like we did to 3%, it'd take 30 years to get there. And that assumes a 3% growth. If you do a 2.5% growth, it's 2085 before you ever get rid of the income tax. That's not real tax relief to the citizens. We want to get real tax relief, real money back into their pockets as quickly as possible in a responsible way. We think our plan does that.
Do you have some flexibility on the House's plan?
Oh, we absolutely. We are willing to listen to any suggestions for improvement. Mm-hmm. Of course, we will. But what we put out there is a way to get rid of the income tax plan, and we believe we've addressed all the questions or concerns that have been raised about that. So I think we have answers for every concern that's been raised.
Have you been privy to their consultants compared to who your consultants were, the people that did some of the markup of the numbers on your side?
Well, I don't know who their consultants, as you say, are. I don't know who they all have been talking to. We, of course, have provided the names of the people that we've talked to, and many of those are going to be testifying over the next 2 days. Grover Norquist is coming in. You familiar with Grover Norquist?
Yeah. He's been on the air with us several times.
He's coming. A guy named Gerard Gibbert, who
I've heard the guy's name.
I think works here maybe some.
He's a freaking think tank.
Oh, he's a brilliant man.
He's a think tank.
Yeah, he's coming. Yeah. We've got two economists from Ole Miss who did a report on an analysis of our bill. So we got a lot of really big names and very qualified people coming to testify.
We have so many people who join us, new listeners, and I failed to do this. And I was going to grab some of the numbers that you and I talked about the last time you were on, because you specifically, and I guess I could Google it up, and it's in the archive somewhere. Where, and I remember the savings at the low end for some of the workers were people who pay taxes were like $1,400 a year.
Correct.
And the grocery tax was cut in half, or
correct.
And that would be immediately. You'd have to pay only half for your grocery taxes. So there was a tremendous savings on that one.
Correct.
But where your sales tax would be increased, I think you guys had the figures that you would, and I don't have the numbers. Do you remember some of those numbers?
Oh, yeah, I remember. Sure.
Throw them out there.
Okay. Well, the proposal that we have is to immediately exempt the first $40,000 of income right out of the gate. Mm-hmm. That puts almost $1,300. The actual number is $1,285, right at $1,300, back into the pocket of every taxpayer. For a married couple, that's double that. That's almost $2,600 that stays in their pockets right out of the gate. That's almost $200 a month for a married couple. Yep. On top of that, they get their grocery tax cut in half. Now, that's real savings. Now, if we just phased it out like some others have proposed, that's $50, $40 that stays in their pocket. Now, would you rather have the $40 or the $1,500?
Here's where it gets so difficult. By the way, they're showing the heat index and Mississippi is right in the hot zone there. So look for temperatures to feel like about 110 today, I think.
The concern, though, as you mentioned, is that some people are like, well, you're just swapping my money. You're giving me back $1,300 on this side, but you're going to raise my sales tax, which takes it out on the other side. And that's just not true. It doesn't happen that way, because you're never going to spend more. If we raise the sales tax 2.5 pennies, you're never going to spend at 2.5 pennies more than you're getting back by eliminating the income tax. Here's why. Most of what you spend your money on is not subject to the sales tax. People need to understand that.
Right.
Your mortgage, your medicines, your gasoline, your insurance, your utilities for your house, none of that's subject to the sales tax. Only the stuff that you spend your money on that's subject to the sales tax is going to go up. And so the overwhelming majority of your money is not subject to the sales tax. Therefore, your increased burden. If you're going to, let me give you this number. We're putting back into your pockets $1,300 when we eliminate your income tax right out of the gate. You would have to spend $51,000 on stuff subject to the sales tax to eat up that $1,300.
Bingo.
You're never going to get there. You're never going on stuff subject to the sales tax. So you'd have to spend $51,000 to eat up that $1,300. You're never going to spend more by raising sales tax than you're going to spend and you're going to get. And keep in mind, Paul, that's just the first 7 years. In 7 years, we raised the exemption to $100,000, which is $4,500 back into the pocket of a taxpayer, $9,000 back into the pocket of a married couple. You'd have to spend $161,000 on stuff subject to the sales tax to eat up that $4,500. You're never going to get
and
that.
And that money goes back into the economy because it
goes back into the economy.
A perfect example of this is somebody called and said, look, I'm going to be paying a couple of $100 more for the car that I'm going to buy.
Right.
Well, you're not going to buy a car every year. You're not going to buy a vehicle every, 4 or 5 years? On the average right now, it's about 5 years.
According to the Bureau of Labor Statistics, on average, people buy a car every 7 years.
7 years.
Some buying it sooner, some buying it later, but on average, 7 years. Now, the increased tax, if we raise the sales tax 2.5 pennies on a $20,000 vehicle, is $450. The increased tax on a $60,000 vehicle is $1,500. But we're giving you back $1,300 to cover that tax. But unless you're buying a car every year, you got $1,300 year 1, year 2, year 3, year 4, year 5, all the way up to year 7. If you're that average person, that's $10,000 more dollars you got in your pocket, not only to cover the tax, but to buy a more expensive vehicle. There's no downside to putting money back into the pockets of the people.
I don't disagree with you. I have heard.
And if you're a radio talk show personality, the amount of money that goes back into your pocket is just incalculable.
Yeah, because I keep the vehicle for 14 years.
Well,
so.
maybe so.
The other part of this is some members of the Senate says, well, wait a minute, we're overblowing the effects of this as far as what it's going to do for the state of Mississippi of attracting people. I have no idea where they got that figure.
Hey, I have no idea either. I think that is just...
You've heard that, too.
Oh, well, yes. But look at the two states that had the most growth out of the census last year, California, Florida. Retirees are flocking to those two states. None of us don't go to Disney World because the tax rate's 15% down there. Yep. It is not stopping their growth. It's not stopping people from coming to the state. Look at the two that had the most population loss, California and New York, two of the highest tax rates in the country. The three neighbors we have that don't have income tax are Texas, Tennessee, and Florida, and all three of them, their economies are blowing up.
They always point to their economies as something where there's tourism, gas and oil, and et cetera, et cetera. But we have something, too. We have tourism to the point. We have a very, very healthy casino industry in this state.
That's exactly right.
I have to ask you a question. If you go to Clinton, Mississippi, where you live, and you stay in a hotel, do they have a hotel tax there?
You know, I don't recall if we have the
many
hotel
of the cities do have added a percent or 2% over the years. And,
you're right.
Do they have that one? Let's say at the Beau Rivage.
Yeah, I don't know.
I don't either.
I don't know if they do down there or not.
Has anybody ever computed this, whether a hotel tax or a percent or 2% additional tax on a very healthy industry? would help fill that gap of what we're going to be losing, along with if we do pass the medical marijuana bill, so use some of that money.
Oh, absolutely. But because that's part of the when you move from an income tax, which is only being paid by those people who pay income tax, and out-of-staters don't pay income tax, it's not residents here, you move away from that to a sales tax, every one of those out-of-staters now become taxpayers.
But if you use
they
those,
help share that
if you
burden.
use those two numbers right there, do you have any idea how close you could come closing the gap?
You can't. We don't know yet on how much marijuana would be sold, so it's hard to calculate what that figure is. But we do know that sales tax generates $400 million a year.
Yeah.
Part of which those out-of-staters